I do want to welcome in our next guest, though. Broaden out the conversation, take a broader look at the markets today and these all-time highs that we're seeing. Joining us now, Jeffrey Small, partner of the Retirement Income Source. Jeffrey, great to have you back on the show and on yet another record-breaking day we have here.
Yeah, everyone's amazed at the rally in the markets, but this feels more like less like a normal tech cycle and more like the early innings of a multi-year productivity and infrastructure revolution as everyone tries to look around corners to discover, what's the unknown that's going to be known that's going to influence the market. And so basically what's happening right now, the bull market's being influenced by the AI brain. And it's going to be all about who powers it, cools it, finances it, and distributes it, Marley.
And Jeffrey, there was a lot of conversation before we got NVIDIA that sell in May and go away was going to come. It was just going to come after we heard from NVIDIA. That doesn't seem to be the case at all here. We've had quite a lot of activity as we're now fast approaching the end of May. We only have 4 days left in the month here. And as you're looking at it, are these adages of the past sort of going by the wayside because we are in this new potential fourth industrial revolution?
Well, it really is. I mean, we're witnessing the greatest deployment of capital ever in the history of the markets. NVIDIA is still the centerpiece of the AI build-out with unmatched GPU dominance and pricing power. Their margins are great still. They're still screaming, on their growth side. So, that's where we are today. I mean, we're in the middle of this. It's just beginning. It's going to continue probably for the next decade.
And as we look at this rally, tech, of course, leading today. We've got Micron now a $1 trillion market cap, but we have seen some broadening out. We are broadening out beyond these mega caps. How important is that breadth to the sustainability and the health of this rally?
Yeah, it's extremely important for the market to broaden out here if we want to sustain a longer-term secular bull market. And so, the market does still have a fear of large numbers due to the trillion-dollar valuations and the concentrations, but we are starting to see the market finally start to breathe in other ways. And for the rest of this year, at least, Marley, the theme is very, very optimistic, a lot of bullishness, lots of earnings growth, higher calls are coming in for end-of-the-year S&P valuations and numbers. 8250 I heard today. Was 7,700 at the beginning of the year, so let's keep ratcheting up. As earnings keep growing, the market value keeps expanding.
And as we look at this expansion, we get into these conversations about the revolution. I just called it the fourth industrial revolution, but there's debate about what kind of revolution this is. Is it a technological revolution? Is it an infrastructure revolution? Who is going to be the winner when we look back on this decades from now? How are we going to refer to it? And I know that you believe this is really an infrastructure play. This is really about the build out behind everything. So take us through that and where you're seeing the most opportunity.
Well, investors are really realizing there's an entire ecosystem around AI. Not just software winners, but power companies, grid operators, Marley, cybersecurity firms, and even infrastructure providers. And so, the next phase of the bull market probably won't be led by just 7 stocks like it has been. It'll be led by the ripple effects of the 7 stocks that those 7 stocks have created as a way of all their investing. And so, you want to own things in the AI infrastructure space, the semiconductor space, the power and energy infrastructure space. And believe it or not, even the income and yield space, because yields have become fashionable again with rates going up very high. And so there's lots of options for customers out there, for consumers to buy stocks, but they just don't know which ones to buy at this time. So we'll talk about those next.
All right, let's talk about them now. So as you look at specific names or specific sectors, where are you seeing that opportunity in these ripple effects?
Well, from the ripple effect side, the power energy infrastructure is very fascinating. We like Constellation Energy. They're a direct beneficiary of surging electricity and the demand from AI and data centers. Of course, GE Vernova is another great one. Massive exposure they have to grid modernization, turbines, and electrification. And we've seen things like Bloom Energy absolutely explode because they're really the only agnostic, self-sustaining on-site power generator. Their stock is up about 2,000% in the last 12 months. Eaton's another one of the highest quality infrastructure names tied to electrical expansion. And Quanta Services is another one, a strong way to play transmission lines, utility upgrades, and AI-related power build-outs. And so there's lots of other plays in there as well, but those are some of our favorites.
And as we look at that space, I mean, grid upgrading and infrastructure upgrading has become a huge conversation because we simply, as it stands, cannot support this build out along with the rise of EV and the build out of homes in a lot of these areas where they're putting these data centers. But as you look at alternative resources, are you looking at nuclear at all or wind and solar of any appeal to you? Because that grid build out is going to take some time, and there have to, as you highlighted Bloom there have to be other alternative measures while that happens.
Well, you're right. I mean, of course, we like Oklo as a nuclear option right now. If somebody wants to be invested in the energy space due to infrastructure, OKLO is a good one to pick right now. That would be the best one. But as far as solar and wind, I don't think that they can compete with those other categories right now. We're not fans of solar and wind at this stage.
All right. And as you look at, you were mentioning with where yields are right now, you're looking at some of the income oriented investments. As you look at that space, and I think I was saying the 10-year at the top of the show is about 450 right now. So we've come considerably back from some of those highs we saw last week. But where are you looking in that space and trying to play some of this and looking at that we do have the potential still for a hike by the end of the year?
Well, ultimately, we see rates coming down, improving valuations and things that produce dividends and yields. But I think there's lots of good plays with rates so high. The marketplace has kind of been beaten up. We like Ares Capital. It's an attractive yield with institutional private credit exposure. Blue Owl Capital got beat up for no reason because they raised a couple $2 billion. And, they're growing rapidly alongside private credit and alternative income demand. Blackstone's another one. And these all have yields of 8 to 11%, by the way. Blackstone has broad exposure to private equity, infrastructure, real estate, and credit. So there's lots of good picks out there, but income has become fashionable. And why is that important, Marley? Well, in January of 2000, I could have bought a 20-year treasury paying 6.8% guaranteed for 20 years. Well, if I had told you in January of 2000 that was going to beat the market for the next 20 years, you probably would have laughed at me, and so would everybody on the show. But that's exactly what's happened. And so when valuations get stretched, we need to own yields that are going to outperform 7, 8, 9% over the longer term because the market is at the thresholds of maximized values.
And as you look at this and we talk about some of the opportunities outside of these mega cap names and this broadening beyond those names, are you still looking at those names? Do you still see signs of growth and opportunity there, or are you moving away from big tech?
No, we're not moving away from big tech. We're holding our allocations. And if we see a substantial dip, of course, we're going to nibble and buy more. But right now, we're in a hold pattern with big tech, mainly the Mag 7 companies. And you can see that the beta has gone up quite a bit, but the companies are growing. And as long as they keep growing at their paces, the numbers will keep going up. The broader macro case, though, is a little bit more complex. If AI spending slows, rates stay higher for longer, we could see all of these trades fall under sales compression, Marley. And so that's the caveat that we're trying to balance out now.
All right. Well, Jeffrey, really appreciate you being with us on this Tuesday morning to take a broader look at the macro setup that we have right now. Jeffrey Small, partner of the Retirement Income Source.